Good afternoon. My name is Eileen Munster, and I'm with the NGA Show. Thank you so much for joining our webinar today. We have a great and exciting and informative topic. And before I introduce our presenter, I would like to go over the format and some housekeeping items just to keep in mind. All audience members are on listen-only mode, which means you're muted. We will be monitoring audience engagement on the dashboard and do encourage you to participate by using the question pane. There will be time for questions at the end of the presentation. We are recording this webinar, and you will receive an email with a copy of the recording so that you may listen to and refer back to at any time. This webinar, as well as others in our series, will be made available on the NGA Show website later this week. And now, without further delay, I would like to introduce our presenter, Bob Graybill. Bob is President and CEO of FMS. He joined FMS in 2000 and has over 25 years of experience in the retail grocery industry. He currently leads the FMS team in meeting their goal of helping retailers succeed through benchmarking, best practices, and decision support. And so without further ado, Bob, it's all yours.
Thank you, Eileen. I appreciate it. I guess at this point, good afternoon for the people on the East Coast. Good morning for everybody out West. We're going to talk a little bit today about the PPP Loan Forgiveness. As many of you are probably aware, last week the House and Senate had passed an updated provision in the bill to take care of some issues that were floating out there that we're going to talk about. So as Eileen stated, I'm with FMS, and we've been tracking obviously the PPP calculations for our retailers, in addition to following the rules as far as the loan forgiveness and what qualifies in the number side of it. So from today's perspective, I just kind of wanted to walk down what we are not going to cover today. And when I say what we're not going to cover, meaning everybody has heard the discussion about, should I apply for this? Do I qualify? In the rules state, were you damaged by COVID? Were you unable to get capital? And all kinds of criteria that you really need to answer from your own perspective for your own company. And I say that because there's a lot of subjective things out there, and hopefully over time the government will sort of nail those down. What we are covering, though, is if you've applied for the loan and basically how we calculate the loan forgiveness, what qualifies as part of that loan forgiveness. But again, not the affidavit part that says, hey, you know what, should I sign up for this, should I not? We'll talk a little bit about kind of what qualifies you for that, but we're not going to sit there and go through individually because every company is different. So with that said, we're going to go ahead and get started. I'm going to first cover what changed last week. I want to sort of go through that because I want to kind of level set, and then we're going to use that same information to go through and talk about the individual calculation, because it's really kind of the overall rules that sort of change with the exception of the one percentage, and then we'll get into the number side of it. So from a PPP loan forgiveness perspective, one of the big things that was sitting out there was the fact that it was an 8-week window. This was less impactful for grocery stores, but more impactful for people that owned other types of businesses that weren't allowed to open. And as we know, a lot of our grocery store owners own other types of businesses. And as a result, basically, this 24-week thing may open up opportunity for other types of businesses to allow you to qualify for loan forgiveness. Grocery stores, I think pretty much in every state, were open throughout this whole thing because people had to eat as they closed restaurants. So the end result was that 8-week window wasn't as impactful. Congress came back because of areas like New York City, where, for example, if you were a dentist and you couldn't open up at all except for emergencies, you wouldn't bring your staff back, you wouldn't qualify for loan forgiveness, even though your business was essentially damaged or really significantly hurt by not being open. So the purpose of the 24 weeks is states begin to implement phase 1, phase 2, phase 3, to sort of give everybody that window of time to essentially take advantage of the loan forgiveness and bring people back. The goal of this bill is to bring people back to work and to help companies that were damaged and hurt by this, and if they couldn't get funding. So if you did apply for the loan during the original 8-week period, when it basically said it was 8 weeks, you still have the option to remain at 8 weeks. I'm not sure why anybody would, but and I'll explain that a little bit later. There might be some unique cases if you spent all your money and qualified for 100% forgiveness. But the reality is you were basing it off of 2.5 months when you did the original loan application. And now you're doing an 8-week calculation. So you're going from 10 weeks down to 8. And from my perspective, obviously that's 80%, unless if you had some ramp up in employee count and employee expenditures. A lot of grocery stores may, because of the amount of people coming in the store, night crews having to stock to maintain social distancing. And then the other side is any overtime calculations, et cetera. So you really have to look at what makes sense for you. If you spent your funds and you meet the percentage of payroll requirements at the 8 weeks, you might as well, if you've got 100% forgiveness, go for it. If you don't, Congress gave that gift out of 24 weeks after the fact, and take advantage of it. And we'll talk more about the calculation. So one of the other things that changed is we were looking at 60% of the initial loan amounts on payroll costs. Before this date, it was 75%. But at this point, you can spend 60% or more of the initial loan amount on payroll costs. If you fall below that, none of the loan will be forgiven. So they made it, hard, fast rule, 60% on the payroll. I would recommend everybody, again, a lot of the grocery stores are going to meet this requirement because of the busyness and people coming in the stores to shop. But if you have non-grocery entities, you really need to start doing your math now. You've gotten this longer window past the 8 weeks. And if you're going to, make some adjustments in hiring, really start kind of doing that math. Obviously, you don't want to pay more in payroll than what the benefit to the bottom line of your company is, even with the PPP forgiveness. But you want to be able to kind of ratchet up and kind of do your math of what makes most sense for the bottom line. For a company that's got no sales coming in and, to bring people back for 25, it just makes no sense because you're going to have other expenses. Whereas if you can build your sales, bring your staff in and get your payroll number up to the 60% number, then that makes perfect sense to start that ramp up from a business perspective. But do the math now. Every grocery store I've seen, this isn't going to be an issue. But again, we've got guys that have other properties, including golf courses and, different things. So the end result is do your math. One of our clients has some hotels, for example, in addition to those grocery stores. They're just not seeing room bookings since they've been allowed to reopen because you really have a lot of businesses that are restricting travel from their employees. So just look on a case-by-case basis. I do know most of the people here are essentially grocery store owners, but I also know a lot of you guys own other businesses. So we look at another change that took place. They talked about some of whether or not you could defer your Social Security tax burden into 2021 and 2022. And they sort of clarified that an employer who has a PPP loan and forgiveness may continue to defer that. Originally, there was kind of a pullback on that. But with that, it's essentially a free loan from the government. The big thing I recommend anytime you defer any kind of payment, just remember it's there. When you start looking at different numbers, those things start adding up and all of a sudden you've got this tax burden. So for example, with the income tax postponement till July 15th, the reality is and with first quarter's payment till July 15th, now all of a sudden you have first quarter, second quarter, and your year-end difference in your tax payment. Same thing with this, the FICA taxes, you want to really just kind of keep in your mind that you're going to have that money due so that you don't forget about it and sort of have a cash shortage in the future, because a lot of stores are, building cash now. Just remember what's coming up. Any kind of deferrals that you do, whether or not you're going to choose to do the forgiveness route on the PPP loan, or it's going to turn into a loan, or you want to pay it back at the end. Those are all things you need to sort of cash flow and manage. And again, I put down here, it's a free loan, but remember that you do owe it back and it's going to be due. So from the other side of the changes to the law, what we've got is the loan repayment period's been extended for 5 years. The bad part about this is what we're looking at, if you did the original loan period, essentially they're saying, okay, that's 1 year. Anybody who applies, from here forward gets the extended 5 years for the payments. You really need to talk to your bank because your lender is going to negotiate the maturity with you. I would imagine as people learn about this rule and about the, the new rules, they're going to turn around and everybody's going to flood the banks again. If you applied for one of these loans at the beginning, you clearly remember that you couldn't get hold of your banker wasn't getting back to you, he's telling you you're going to get the loan, you're trying to figure out the application process. The larger banks created stuff online. So sit down with your banker now and start the process if you do want to extend this period of time out for anything that's not forgiven. Because banks are overwhelmed. I spoke with PNC last Thursday afternoon about this, and just to kind of get a feel, and they are just swamped. And with the extension, we're going to talk at the end about some of the funds that are available out there, or not at the end, but at the end of the section, they're going to get swamped again. So with that, businesses that didn't apply, and this is the slide I was referring to for the PPP, because you looked and said, hey, I had 8 weeks out there. Why would I do this? It's just not going to happen. As of June 3rd, basically last Wednesday, there was approximately $120 billion in funding still available. So now that they've done this extension, people are starting to apply. So if you had a business you didn't apply for, you should apply. Obviously, because the extended weeks, even if you didn't think before you had the loan forgiveness, if you were negatively impacted, I would apply now because you've got that longer window to build that 60% of usage against payroll. If you're on this call today, I would assume that you've already applied for your core businesses. But again, anybody you know with other businesses, other business owners you're friends with, they should look at that. The extension, as I stated earlier, was really done because of those states restricting openings in certain businesses and making it basically impossible to qualify for forgiveness. So that's kind of changed up now. So it's a good time to take advantage of that money. I only threw this again at the bottom. I put, hopefully, if you're on this call, you've applied already and you already have your loan, but you can apply at different banks, credit unions, etc. If you don't have a loan and you just happen to pop in on this telephone or on this webinar to learn more. So I'm not going to go into the SBA loan process. We had done webinars in the past on that, and I believe they may even be recorded out there on NGA or FMS's websites. But if you haven't applied or you have a business, you still go through the same route that you did before. If you have a particular business you did not apply for. So we're going to go ahead and get started a little bit into the details. We're going to talk about what makes up the numbers, how do I calculate my numbers, basically the different methods for the payroll calculation, and what items qualify as non-payroll costs. So anything, as you know, when it comes to the government, essentially becomes something that's way more complicated than it probably needs to be. So we're going to go through, talk about different categories. Obviously, things like 1099 vendors, are not covered. We'll talk about that because they can apply on their own. So the government doesn't want you applying for both, et cetera. So if we look at kind of how to calculate, payroll is obviously the biggest number. The original thing wanted the 75%. They've kind of backed off that a little with 60. And so we're going to kind of take a look and say, okay, so how do we calculate this? Because you obviously have weekly payrolls, you cut payroll checks, you hand it to the employee every week. Some people have bi-weekly, some people have semi-monthly, some people have monthly. So the end result is two ways. There's traditional, and again, if you remember, if you did the 8-week, you're still permitted to do your calculation based on the 8-week, if you choose. If you want to go the full length of the 24 weeks, that's fine. But essentially, when we look at it, we take the 8-week or the 56-day period, and the weeks that, the payments take place, the payrolls take place for the pay periods. The government also understood that you could be halfway into a payroll, and maybe you don't want to take the next payroll date for what was essentially both earned or accrued and paid, and you want to actually just roll forward to the first full pay period after the PPP loan was dispersed. Before they did the 8-week or the 24-week thing, this had a little bit more importance because if you were hiring people back or increasing staff, most likely by sort of sliding forward that half a pay period, if you were bi-weekly, for example, you picked up an extra week, probably with more employees in that 8-week period. It's less of a point now when you get into this, 24-week period because you applied based on a 10-week expense. And now we're pushing out and we've got the ability to push forward out. And if you think as your business has grown during this time, bringing people back to work, et cetera, you're going to get the maximum advantage. And I put down here at the bottom, the smaller print allows you to push forward if you're bringing back staff, so it'd be most advantageous. The alternative payroll period, the covered period, only applies to the payroll costs, the calculation of the FTEs, and the salary and hourly wage reductions. And we'll talk about what payroll costs are later in the call. But it's important to realize, because you've got other things in there like rents that obviously might be paid the 1st of the month, the 15th of the month, that are all going to be sort of combobulated, all around and basically split. So they're really looking at that accrued and paid on those. So when we look at the different costs and we dig into the payroll piece, we're really looking at direct payroll costs that benefit the employee, because that's the purpose of this loan. So we've got health insurance costs that you incur. We've got retirement costs that you incur. And there's a slide later on when we go through the worksheet that'll show those line items. And we've got the core payroll. Things that we can't do, we look, payroll costs are considered paid on the day the paychecks are distributed, or essentially the day the ACH, the credit transaction takes place. So when we look at things like, you hit a midweek or a mid-month payroll, do you take when it was paid? Do you take the next full regular payroll date, which is the third item here? Again, if you're in the 8-week thing, it made a lot more difference than on the 24-week. Payroll costs paid and incurred during the period are only counted once. So you'll see at the bottom highlight, it says within your measurement window. What you can't do is say, hey, I paid this on the beginning of the 8-week period, paid the cash out when I got my loan, and then all of a sudden, oh wait, I've got another payroll coming up, I'm going to use that what I've accrued for that last payroll, because then you're essentially double dipping per se, as you're going outside of a pure 8-week window. So if you use the one method, you're doing boom, first payroll after you got your loan, 8 weeks out, or the 56th day. And I'm using the 8-week example, not the 24-week. Or you're going to say, hey, bump it out to the first pay period that fell in that, the first full pay period. So what you don't want to do essentially is double dip, and the government realizes that, and there's really not a reason now with the 24-week. Okay. So eligible non-payroll costs. Couple of things to clarify where there's been some confusion out there. Mortgage interest. Yeah, go ahead.
Bob, before you move on, I have 2 questions. So are company paid health insurance costs covered?
So the health insurance costs fall into the PPP.
Okay. And second question, if paid in alternate payroll period, but paid 5 days in arrears, do we get credit for week 8 since it is paid in the next normal pay period?
So that's the 2 things. So you can either start with the first payroll that didn't include the full pay period, where you actually paid your employees and go the 8 weeks, or in this case where you're paying 5 days in arrear. The main gist of this, if you're using the 8-week and not the 24-week, is essentially the government saying you can cover the 8 weeks of pay. So if you're saying you're going to include that paycheck that was accrued and paid, or you're going to pay what's been accrued, you can use that alternative date and slide forward for your payroll calculation, but just so you only have 8 weeks worth of payroll. That's the deal. So the government doesn't want you double dipping. They also don't want you getting cheated. And if you added people when you're doing that last payroll, you're essentially using that alternative date with the slide forward.
Great, thank you.
And at the end of this, I'll have my email address, phone number, and everything. If you have any super specific questions, I mean, that was a good general question, but if you have anything really specific to your company that might be really weird, you can feel free to email me or reach out to me. So anything else, Eileen, or we good?
Nope. Yep, we're good.
Okay. Just didn't want to get ahead of the game. So we're going to kind of shift gears to non-payroll costs. And when we look at the non-payroll costs, we're looking at things like mortgage interest, rent, utilities. And these, when I talked about the alternative measurement period, we looked at, payroll costs full-time employee calculations, the mortgage interest, the rents, the utilities must be paid. So we're making payment. So you'll see in parentheses there, it says, note the absence of the alternative covered period. So there is no alternative measurement period. So they must be paid during the covered period, or incurred during the covered period and paid on or before the next regular billing date. So if you got your loan on the 2nd of the month and you pay your mortgage on the 1st, they're not going to cheat you out of that, your rent payment or your mortgage payment. So that's one of the things. Going back to the payroll, they want to, during the original 8-week measurement, now again we're up to 24, but during the 8-week measurement, all the government wanted to make sure is you got credit for 8 weeks. Same thing with the rent. If you've got 2 months in there, they want to make sure you got credit for 2 months worth of rent. If you think you're going through and you're doing this calculation, you're like, hey, wow, I managed to squeeze 3 months rent out or this or that, you're doing something wrong, okay? The intent of the bill was to cover that 2-month period, or in the case of the 24 weeks, longer period. But if you start playing games with that, when they talk about, especially, we're going to talk later about the $2 million, the $2 million audit amount, the last thing you want to do is have a black and white error. And what I mean by that is it's just in plain ink on the newspaper print. If a question comes up whether or not you needed the loan, whether or not you qualified for the loan from a need basis, couldn't get funding, that's one thing. That's a conversation for you to argue based on your business. It's another conversation if you outright tried to, pump numbers in there to get more money, or get more forgiveness. And there's really no need for that with this 24-week calculation. But just understand the intent of the law is to cover that 2-month time period, or the longer extended period if you choose that route. It wasn't meant to try and pack it's not like year end where you hurry up and buy a whole bunch of assets to try and get the accelerated and get them in service to get the accelerated depreciation. It's meant to cover that window. There obviously are some exceptions where you can pick up some expenses in there, but just don't try and push outside. The intent of the law is pretty clear. So when we look at the calculations for the covered period, we look at what's called a safe harbor on the salary hourly wage reduction. One thing, and I'm going to back up, I apologize, because I'm going to talk about it again later, but I also want to be clear on the payroll costs. There's a maximum cap of $100,000 on earnings, and the biweekly amount or weekly amount that a person earns. So you have to deduct that. We're going to cover that when we get to the worksheet, but you have to deduct that amount. So the maximum you can deduct for an employee is $100,000. And when you did your original application, you also had that similar cap. So I just want to make sure I was clear on that there, and then we'll repeat that a little bit later. The forgiveness application. So for the full-time employee reduction safe harbor, salary hourly wage reduction safe harbor, typically if you reduce the number of employees, you reduce your amount forgiven. You can potentially push yourself below certain amounts. It would cause the loan to be disqualified for forgiveness, et cetera. So there's a couple different examples out there on safe harbors, but one of the things that recently came up in a discussion with one of our clients, and they happen to be non-grocery because it's a little bit different of a deal, but I'll give this example. This person laid a bunch of people off. They went to bring them back to work, and some of their employees, because of where they are in the country, their unemployment plus the extra $600 there in New York, essentially was more than what the employee made. So they said, well, I'm not coming back to work. Why would I come back to work? I'd rather stay on this. The end result is if you have a qualified offer for an employee return back to work, it's not going to have a negative impact on your calculation. And there's some other safe harbor rules that are out there, but they're really kind of one-off case by case. But that's probably the most common, is offering somebody work back and then having them say, hey, you know what, I'm not interested. I make more money sitting at home or whatever. The full-time equivalent calculation, when we look at the forgiveness application piece, which will again look line item after this, basically says, hey, take your full-time employee numbers by taking the average number of hours paid per week for the applicable employees, divide it by 40, and then round to the nearest tenth. One way to do it. Second way to do it is you can use what's called the simplified calculation, which basically says anybody who works more than 40 hours counts as a 1. and a 0.5 for anybody who works less than 40 hours. In many cases, with a heavy emphasis on a part-time workforce that grocery has and a lot of retail has, the second may actually be more advantageous as far as the count occurs. But it's going to depend on a case by case. Mathematically, they should be relatively close, but if you have a lot of people that kind of fall under that 20 hours and that, you know, say 12 to 15 hours a week, you might end up with that 0.5 calculation paying off a little bit better. So when we go through, we're going to have to verify essentially and provide documentation for what we said we're going to deduct. Okay. So we're asking for forgiveness and we're sitting there saying, hey, I want to not pay this loan back, 80% of this loan, whatever it is. So a simple example in the wages, when we look at we're going to take our total wages. And again, we're going to go through the calculation sheet, the actual papers or the verbiage from the government, but I just want to give a simple one before we confuse it with a bunch of details. So we've got our wages. We're going to reduce by anybody over $100,000 and just the amount over $100,000. So if I make 120, 20 grand comes out over the 100. We're going to add in the health insurance expenses. We're going to add in the retirement benefit expenses. And then we want to make sure that matches on the form. So up in the verbiage here, we really want to tie this. So if we're taking our 940 wages, we're going to do a little calculation for anybody over 100K. We're going to add in those insurance benefits. We're going to add in the retirement benefits. And we're going to get the total. And then we're going to compare that to the wage expense on the PPP loan forgiveness form. Because if you get audited, just because they said $2 million and over is guaranteed an audit, doesn't mean if you're under $2 million, you're not getting audited. Odds may be a lot smaller, but you really want to have the documentation. Odds are your bank, in order to go through the forgiveness process, is going to ask for this documentation from you as well. So, any questions, Eileen, up to this point?
Yep, I do have a few.
Okay.
Okay, so the headcount requirement, if you have 3 employees resign the week we received the PPP, do we now have to have those roles replaced?
So they are counting the number of heads. So you can get hurt by it. You can have your loan forgiveness reduced by it. I don't know your total employee count, but you know, obviously they want you to maintain the job count, but you're not necessarily hurt by it. If you offer those people jobs back and they refuse to come back, or you're trying to fill those roles, there are some safe harbor requirements. And I'd recommend to this person, because I don't know their employee counts, their salary levels, et cetera, if they want to shoot me an email with specifics.
Okay, great, thank you. Next question, if we add additional employees, can their payroll costs be included? In other words, if we had 4 employees on the original application, but now have 5, can we use the 5th employee in forgiveness?
If it comes in that 8, let's use the 8-week versus the new 24-week, but because you can do either. If you're using the 8-week, absolutely, that's what the government wants. They want you to spend this money hiring people. So it's not the same for people per se. If you have 4, somebody quits on you, you go down to 3, and you add 5, and now you have 9. It's your payroll cost during that 8-week period. So the government wants you to hire. They want you to spend this money. Yeah, they'll be tickled if you do that. That's what it's for.
Okay, and then a non-payroll question, are utilities included, such as phone, gas, and city bill?
Yes, and we'll cover some of those detailed items on here, but rent, utilities, mortgages, and I'll talk about this in a little bit with real property and personal things that you can touch. You can't do an acquisition, loan or whatever. There was a lot of talk on the loans and a lot of talk about private equity firms qualifying for these loans. And I'm sure you saw some other organizations that were large that sort of pretended to be small with a whole bunch of subsidiaries, and companies like Ruth Chris that got loans and paid them back. Yeah, this thing is geared towards small business, helping you pay the rent, helping you pay the mortgage, helping you keep the lights on and the power on, and helping you keep your employees employed, or if you have the opportunity to grow those employees, all that much better. I mean, this is an economic stimulus. That's what this is meant for. So the answer is, you're using that 8-week measurement period, or if you're using the extended period, the employees, the utilities, yes.
Okay, thank you. And then
So
final
let me
question.
throw one more thing, Eileen. On that, if you remember the original loan, 75% had to go to payroll costs and then only 25% could be rents, utilities, mortgages. In this case right now, they've changed that to 60% for that extended cycle. So if you, let's say, I don't know, spend a whole bunch of money on rent and a whole bunch of money on utilities with that utility question, you've got to meet that for the loan forgiveness. You can only do that 60% minimum on the payroll costs out of the total. So, sorry, go ahead.
Okay. So the scenario, if you use the 8-week period and you receive your money on Tuesday, does the period start when you receive the money or when you first start paying it out?
So it's the date of the loan funding.
Okay. And then another question, common ownership over 3 business entities and different ownership. But one person has almost 51% control on all 3. Can you explain how this affects loan forgiveness?
Okay, repeat that question one more time. Let me make sure I got it.
So common ownership over 3 business entities and different ownership. But one person has at least 51% control on all 3.
Yeah, so that's a question I'm going to take offline so I make sure I understand the pieces. But typically, if you have controlling interest across all companies, you're going to run into, and it's going to depend on some circumstances, but you're essentially going to be treated kind of lumped because you have controlling ownership by one person. If it's the same person, which it sounds like it is, but that's a question to email me. I want to make sure I understand the full thing of what they're talking about. That's something that needs to be discussed one-on-one.
Okay. Is the less than over 100,000 based on anything over 1923 per week, or do we have to annualize for the 8-week period?
So you know what? I just read this, and I'm basically what they're saying is it's anybody over $100,000, but you should calculate it based on the per pay period. I'm going to have to I apologize. I should have the answer to that off the top of my tongue, and I just read that. I will get an answer back to the group that you guys can send out on that. I want to answer that correct and mess up.
Okay.
I should know that.
And then, okay. An additional question, are bonuses forgivable?
So any payroll is forgivable as far as ordinary course of business. If they're ordinary business items that you're paying to your employees, for example, a lot of people are giving bonus pay, especially for frontline employees in the grocery store. I think we saw some of the larger chains, some of maybe even our least favorite chains do that. So anything that you're paying out to your people to get them to pay, as long as it doesn't push you outside that $100,000 number, the answer is yes.
Okay, great. And that was the last question.
And just real quick, on the same note as bonus, you're seeing some people do combat pay, for example, and I'm calling it combat pay, frontline employee pay, whatever you want to call it. Same kind of thing. You might temporarily be raising your employees' pay $2 an hour because they're a cashier dealing with COVID employees. I'm not going to advise you guys legally, but what I wouldn't do is if all your relatives work in the store and don't really work in the store and they're sitting at home and getting paid as owner's payments, I wouldn't recommend raising all their pay. So, because it's really meant to be something that's benefiting, the employee. Your CPA might tell you otherwise.
Okay. And one more question just popped up. If you spend the money in 16 weeks, can you file for forgiveness just using the 16 weeks?
Yeah, I mean, once you spend the money, you spend the money. I mean, you've got the 24-week period to do the filing, but you're just going to overspend and be beyond what the amount is. So if you use it in 8 weeks, that's fine. It doesn't matter. But it's just spending the money. They're giving you the extension.
Thanks. That's all the questions for now.
Okay. So let me get my screen back functional here. So when we look at the calculations, and I'm going to basically, this comes from the website. They have basically line by line calculations, but the total eligible payroll costs we talked about with the employee health benefit costs, the retirement benefit costs, the payroll, the mortgage businesses or mortgage interest, it's not going to be principal. You can't prepay your loan and call that forgiveness. And either way, under the old rules, you were capped at 75% payroll, 25% non-payroll. Now you're in that 60-40 split. But you'll see here it says does not include prepayments. The loan had to be in effect by February 15th. What they didn't want people doing is running out getting mortgages to help offset the forgiveness. The loans meant to be there, for loans that were in place. We go through, we enter the amount of business rent or lease payments for real or personal property during the covered period. So when we look at, different things that we're renting, one of the things to remember is a lot of people are out there going to their landlords asking for assistance on rent. Probably not a lot of grocery store owners are doing that, but the reality is if you have other businesses, you may be. So if you're looking for discounts on rent and you're not paying that rent during that measurement period, it's not going to be part of the calculation. You can't say, oh, my rent's $5,000 a month, but I got my landlord to give me 90 days or 3 months rent during this time period. It's for the covered time period. When we look at lines 2 through 4, basically anything you don't want to include in the forgiveness amount, you're not required to report the payments. So if for some reason, there's something in there that, I don't know, you're paying an electric bill to keep your boat charged on the water behind your grocery store or something, and you don't want to include that on there, you don't have to. There's more better business examples, but just off the top of my head. When you enter the number from the PPP schedule, Schedule A, which we're going to talk about, we really look at the salary hourly wage reductions in excess of 25% under the old rules, and I apologize, I did not change that. That number's gone up from the 75-25 to the 60-40. And then when we look at Schedule A, which we're going to go down to, so you guys can see, Schedule A takes a look at the cash compensation from the PPP schedule. And we're going to take the average number of FTEs. And if you remember, there were 2 different types of calculations. One taking the hours divided by 40, rounding to the nearest 10th. The other taking anybody over 40 times 1 and anybody under 40 times 0.5. And then basically enter the salary hourly wage reduction from the PPP Schedule A. So if we're reducing anybody down as a result of the pay differentials, and then we get into the cash compensation, we're going to take from the schedule we'll cover, and then the average full-time equivalent from the worksheet, and we're going to put that in here. We're going to take the total amount paid by the borrower for employee contributions to health insurance. So we talked about health insurance, we talked about retirement plans, and we're going to add those in, and then we're going to say, okay, the total amount paid by you, the borrower, for the employer, state, and local taxes assessed on the employee compensation. And we get our total payroll amount. So the total amount paid to the owner and self-employed individuals, they want separate, and I apologize, I sort of lumped that in with payroll or guaranteed payments. And we've got our payroll costs by adding lines 1, 4, 6, 7, 8, 9. So everything we talked about, we're taking our payroll, we're taking our insurances, the tax piece, we're taking the retirement benefits, we're adding it all up, including owners. Again, you're capped at $100,000, so it doesn't matter. What's not included in here is 1099 employees. So if you've got people you pay on 1099, they're not going to be part of this calculation to get to the total payroll costs. We're going to look at the full-time employee equivalent and whether or not we basically did it on the 0.5 for anybody under, or we did the actual hours. And we're going to list the full-time employees during the chosen reference period, the total average FTEs, adding those 3 lines together. And then we're going to do our reduction based on the number of employees that we lost. And as long as we've met the safe harbor, essentially we're good, okay? If we haven't, there's some calculations for the loan reduction. We took questions kind of through. It looks like, Eileen, because I had planned on about 40 minutes, we can take some more questions, and I can also kind of go back through these line items. We kind of talked very in detail. I just wanted everybody to see the schedules and the calculations. Any more questions floating out there?
Sure. So the question about, the common ownership over 3 business entities, one person has, 51% control on all three.
Mhm.
A little clarification. All three entities had different lenders due to where all three entities had primary loans. Will they audit all three entities as one when it comes to the $2 million audit situation?
So the answer to that, and they haven't been super clear, but the answer that I've received from somebody else for somebody else was, the answer is yeah. Basically what they don't want people doing is splitting stuff up. The benefit went essentially to one controlling party. So I would expect an audit, a guaranteed audit on the 2 million plus deal.
Okay, thank you. Next question. Please address rent to a separate entity with the same principal owners.
Okay. So you basically, I'm guessing you own your building that your grocery store's in. Rent is deductible, or is deductible off the forgiveness amount. With the common ownership, Eileen, I'd like to get back and answer that question because I don't know that directly off the top of my head, because I want to understand the ownership. It's family ownership or just the store. Is it owned by an individual, or is it owned by a family or a trust? And it really shouldn't have any impact on it, but I just want to make sure, is the rent market rate? Is it above market rate, et cetera? In other words, you can't have non-reasonable rent.
Okay, that might be a great question for the person to reach out to you directly.
Yeah, I mean, the answer to it is you can deduct rent. And if you rent a building to yourself, you still deduct rent, even if it's a related party. I'll give a very personal example. There's a particular building that we rent for one of our offices that's owned by 2 family members that are not me. And that is deductible off of the PPP. As far as the rent's concerned, they're related parties. So there's not really restrictions there, but it's got to be a market. It can't be something where you're intentionally charging more rent than market.
Okay. These are separate LLCs.
Separate LLCs, same ownership or same control, or different? If they want to answer that.
I just got the separate LLCs, so.
Yeah, I mean, if they're separate LLCs, yeah, you can deduct rent as long as it's fair and reasonable.
Okay.
And don't all of a sudden triple your rent so you meet your 100% or something. No.
Okay, next question. If we have a lower head count, but our part-time employees work more hours, we will make our FTE, but total head count is less. Will we be penalized?
Yeah, so that's one I'd like to take offline and calculate with them, and I can tell them how they'll be impacted.
Okay, great, thank you. Next question. If the store has a union, are union dues and union health benefits that the employer pays, are those considered forgivable?
So when you say union dues are typically paid by the employee in their paycheck out of their wages. And then, so I mean, that's part of your wages you're paying the employee, and it's well, depending on the state, it could be a voluntary deduction or a non-voluntary deduction if you're a closed shop or not. And what was the second half?
Sorry, I just lost the question.
And they can email direct if you delete it accidentally.
Sorry, if it's right, if the employer pays, is that considered forgivable?
The employer
pays the union dues.
That I got to look up, because
Okay.
Usually it's a deduction off the employee's paycheck, not the employer paying.
Okay. All right, total question 14 is line number 9 on your schedule. The total amount to owner employees cannot be included in the forgiveness. That's a question.
I'm sorry, repeat it.
Looking at line 9 on your schedule, the total amount to owner employees cannot be included in the forgiveness. That's a question.
Right, and that's what it says right there. This amount may not be included in the PPP.
All right, another question. Concerning owner payroll, is the total amount paid to an owner not allowed or just the amount over 100,000?
So let me clarify, because so when going through this, if you have, because this sentence is a little bit misleading. So if you're an owner employee and you're getting payroll and paid, it's the amount over $100,000. What you can't have, which is the slash with the general partners, if you're doing distributions to owners is not part of a guaranteed payroll or payment, that is not to be included in the PPP. And I think that's where that second question was going.
Okay. Next question. Does everything go back to February or when you started your loan?
It's the day that you're funded.
Okay. And a request for your contact information, which we will put up at the end.
Yep.
Can we submit forgiveness application prior to the 24 weeks if we meet the loan total prior to then?
I'm not sure I understand that quite. Yeah, if you meet in the 8-week window, you can submit your loan forgiveness. If you want to do the 24-week window, you can do the 24-week window. Yes. Yeah, you have the option on that, and that was in an earlier slide that you can use that. You can use any of the windows. It's really about extending the time so you can spend the money.
Okay. If we get funded on the 1st and an electrical bill is paid on the 2nd for electricity used prior to the funding, can it be included?
Repeat that. These are getting rather specific. Go ahead.
Yes. So if they receive funding on the 1st of the month and an electrical bill is paid on the 2nd for electricity used prior to that funding, can it be included?
So you can do
electricity used the previous month
and paid. If you remember back, and I'll go back to that slide, but if you remember back when you look at the non-payroll expenses, I gave the example that they don't want you to do more than 2 months. So what they wouldn't want you to do is take the bill paid, take it, and then so on the non-payroll costs. So basically, an eligible non-payroll cost, mortgage, interest, rent, and utilities during the covered period. So it's got to be out there. You can't take that one and then accrue. So it must be paid during the covered period. So if you remember the parentheses I walked through, note the absence of the alternative covered period, or incur, or not end, or incurred during the covered period and paid on or before the next regular billing date. So if you think about that example of the 2nd, what you can't do is end up with 3 months, because a lot of power companies don't bill on the same day, for example. You're really looking at what was paid on that 2nd. Yes, you can include that in your next month's bill. Or you can do incurred during the covered period and paid before the next date. So let's say they did bill on the 2nd every month, and it was June 2nd, July 2nd's bill, or we could take July 2nd and August 2nd because it's paid on the next regular billing cycle. But you can't take paid and covered period, because then you'd be double dip. Then you could manage 3 utility bills into, and this is on the 8-week example. I'm trying to just, because you also have the 24-week cycle.
Okay, thank you. So next question is I have 2 questions about ESOP. So relating to retirement benefits, are ESOP payments considered forgiven? And we
I do not know.
Second question.
Yeah, Eileen, I did not know the answer to that. They can email me and I will have one of our tax people look that up.
Okay. All right, next question. If an employee retired and had always been planning to retire before the PPP loan and you do not replace them, are you penalized for this on FDE forgiveness?
Yeah, that's something, again, email me. These are getting super specific.
We pay the welfare and annuity for our union members. Is it forgivable?
Again, email me, please. These are getting down to individual needs.
Okay. Okay. Are employee FICA contributions and employee withholding for federal taxes included in the total amount of payroll considered for forgiveness?
So are the employee or employer? So the payroll, it's state, and then we'll go back to the other slide, because are you guys giving these slides out to everybody?
Yes.
Okay, good. So if you go down to the worksheet on the wage reduction, the salary reduction, you look down here, it says state and local taxes assessed in the employee compensation for the taxes.
Okay. Next question. An audit for the loan is triggered if over $2 million. Is that based on the amount of loan forgiven or based on original loan
Based on
amount?
the loan. Based on the loan. And I'll give you an example. We have one client that did $2,013,000. They will fall into that, whether they forgive 1.9 or they forgive 2,013,000. But they're barely over the 2 million. Obviously, after that came out, they're like, "Can I give some back?" So.
Okay. Can we submit the loan forgiveness application after 12 weeks, for example, if we choose the 24-week window? Or do we have to wait until the end of the 24 weeks?
So the target, you're trying to get to the 100% forgiveness time period. I'm not sure I understand the purpose of that question. Basically, if you spend it, you can start your calculation and fill the application out. Whether your bank's going to, take the process early, that's really going to be up to them. I assume they're going to. And maybe I'm not understanding the question because we keep kind of getting that same question. Is it coming from the same person, Eileen?
I don't know.
Okay. But they can reach out direct if it is.
Okay. If you want to do the 8-week period, what is the latest you can submit for forgiveness? How much time do you have to get all your info in?
That's going to really depend on your bank. Many of the banks don't even have the portal set up to enter the information in if they're doing a paper form. But you really have to talk to your lender on that. And I'll give you an example. Our bank that we deal with here in Maryland, that a lot of our clients dealt with, quite frankly, didn't have their portal up to a week later than most of the other banks. And we had a handful of clients that missed the opportunity on the first tranche. So your bank is going to be the one that's going to be collecting the data for the loan forgiveness, and then they'll be submitting that to the SBA. But most of the banks have started building their portals already.
Thank you. Okay. And where can we find the forms to file for forgiveness?
So if you go out to the SBA website, you can find all the forms out there. They're also on one of the slides here. This is from the AICPA, has some guidelines. But if you go to the SBA website and just type in PPP Loan Forgiveness, you can find the forms and information. I don't know if they're published yet for the most recent changes, but the calculations going to work relatively the same.
Okay, great, thank you. Okay, Bob, that was our last question. So if you wouldn't mind putting your contact information back up.
Yep. And what I would ask is, depending on the number of questions, if you guys can email me. And Eileen, what I will do is on those 6 questions that I scribbled down that I said I would get answered back or they were specific, I will type up some specific examples that you guys can blast out.
Wonderful, thank you. Thank you. And we will send a copy of the recording and the PowerPoint to all the registered attendees. So I'd like to thank you all for joining the webinar this afternoon. Very much appreciate your attendance. And Bob, thank you so much. This was very informative. It's a tough subject and you provided a lot of clarity. So I thank you very much for doing that. And with that, I will wish you all a wonderful afternoon. And I hope to see you at the NGA show in February. Take care, everyone.